everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today, we're taking a look at the Euro currency futures. Very interesting scenario that we have working itself out here on the Euro. Obviously, range bound, right? I don't think it takes a whole lot more than a couple seconds of looking at the chart to realize range. But when we're coming into a range, there are several aspects that have kind of a force on the range. First of all, the movement that happened before going into the range. What kind of movement did we see, right? If we zoom out a little bit, we can see that overall, the trend really isn't established very well other than short-term being bearish. So there is a slight bear tone to the range that we're getting today. And with that bearishness overall from the drop yesterday going into today, the sell side is going to have a slightly larger emphasis. And we can see that play out in the opportunities that showed up today, given that we had the double bottom. Now, this happened right before we start the room up, so if you caught that one, awesome work, but I didn't mark it because 8 o'clock is literally the next candle. But when we rally up to the upside, we have a huge blow-off candle. And with that big blow-off candle in the type of day that we're in with a range, we're still in the range, we're at the highs of the range. All of the sellers are going to look at that candle and think there is no way. There's just not a chance that the buyers have here to try to shove the market back up. It's going against the shorter term trend from yesterday that dropped lower. We have a huge bull candle in a range that is closing at the highs of the range, that is testing the highs of the range. There are so many tick marks for the sellers to check off that it's almost impossible for them to not sell it. And that drives the market for a selling opportunity off the highs right back down to the lows. Now, the same situation, copy-paste right here, happens in the bigger move, right? We have a big breakdown. This is what the sellers are looking for, right? The overall trend is bearish. Sellers have a reason to believe that this may have a little bit of juice in the tank, but happening all at the lows after it had already gone on for 20-25 minutes, not likely going to be sustainable movement and continue further down before catching a bounce. That bounce may only be one candle. That bounce may be a handful of candles, and maybe it reverses all the way up to the highs. But either way, there's a good chance for a buying opportunity here to shove the market back up for a quick little scalp to retest that prior low of day. And then from there, decide what they want to do. Do they want to go back up to the highs again, or do they want to fail back lower? All depends on what the context of the market is at that point in time. And when we come into the prior low of day, all of the buyers who bought in down here, assuming range, are taking profit. That's the scalping target area there. And it's right on top of the prior low of day. Going backward, we have a low, a low, a low. They're all stacking up in the exact same place. And we have the prior low of day. Everything is showing that the sellers may make one more attempt to the downside. We get really weak bearishness here, not really anything to show, but then they follow through with a doji into another strong bear. They're not letting the buyers come back in after this big bull bar right here. It gained no ground. It popped up and then hasn't come back ever since and has been falling. And that gives a big clue that the sellers are attempting to take over. The big thing that we're looking for now in this context, since there is a selling opportunity, is a 3-push wedge bottom. Do we get down to the lows of a wedge? And if we do, what happens down there? So looking for a selling opportunity, drive the market down, hit those wedge lows. In this case, it blew off, showing us that there's possible exhaustion at the bottom. And now, because of the exhaustion, we're in a range still that hasn't changed. We're just trying to break away from the range. Now we're looking to buy into these lows, assuming that this low side is going to fail and drive the market back up. Now we are going into lunchtime. There's not really any news today, so it is kind of slow now. But that's the overall emphasis. When you have a range, assume that it doesn't break down. And even if it does break out a little ways, assume that that breakout's more likely going to fail, because it almost always does. And this is a good example right here where they got the breakdown. You could have even sold into it, but right as soon as that breakout is done, you start thinking back to the upside again. Now, it may not make it all the way back up, but that prior low a day looks pretty juicy, and it has all day. So that's kind of the anticipation here. But that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, maybe a little bit entertaining as well, and we'll see you next time.